Hello traders, Cousin Vinny coming to you from theclosingprint.com, December 12th, 2021. In this edition of your weekend video newsletter, we'll discuss the indices, all of which closed higher with the S&P, NASDAQ, and the New York Stock Exchange, along with the industrials looking the best. IWM, while it did close higher for the week, was the laggard as riskier small cap stocks failed to perform. Big cap tech stocks managed to move higher. Most of our indicators are now bullish at 12 with 7 neutral and 1 bearish. The 1 bearish being NIMO and NAMO, which have yet to turn but look like they're ready to bottom and start to move higher going into the last 3 weeks of 2021. The heat maps are improving. Most defensive sectors were bullish. We had aerospace, real estate, industrials, consumer staples, utilities, and healthcare performing well, with performance in small cap consumer staples, energy, and technology. With the US dollar pulling back a little bit, we had international markets also moving higher. Most countries are bullish, with Brazil, Mexico, Turkey, and Greece, with potential to follow through this week. Bukowski is showing his CPI signal bullish at 89.7%, with 8 bearish patterns, 70 bullish patterns, and 615 patterns waiting for breakout. We have the S&P with support at 4550, 450 for spiders, and 390 for the Qs, with resistance on the Qs at 400 and 4700 for the S&P 500, 470 for the spiders. Bottom line, as long as we stay above the zero gamma level at 4676 and the vol trigger at 4685, we have positive gamma and should be looking for dealers to buy the dip and sell the rip. The Dow Industrials had a very prosperous week on Monday, testing the 50-day, and then Tuesday, Wednesday, Thursday following through above the 50-day, headed back to all-time highs, with RSI above 50, volume increasing, MACD and stochastics pointing to higher prices. The S&P 500 closed just shy of all-time highs at 4712, the high for the year 4743.83, with RSI rising, volume increasing, MACD stochastics also pushing higher. Removing the weight of these top 10 big cap stocks shows the S&P equal weight index on a buy signal that started last week, following through, looking for the number of stocks trading above the 50-day to push a bit higher, and CCI to signal a follow-through and a test of all-time highs. Going into this week, we also see big cap tech and the Qs in particular with resistance at 400 and 405, with price action consolidating at the 9 and 21 day, RSI rising, volume increasing, MACD about to cross. Meanwhile, the small cap Russell 2000 started off the week at 213.71, reversed during the day and pushed back above the 50-day, following through Wednesday, Thursday, but rejected at the 21-day moving average, settling at the 50-day, but up on the week. We're looking for a follow-through in small caps that would indicate risk on, as these assets are considered very risky, in addition to IBB, two of our signals going into the last 3 weeks of 2021. In addition, the NYSE over 2,600 stocks did close below the zero line. While the bulls did maintain control, we do need to see the New York Stock Exchange advanced decline moving higher and breadth improve. Additional measures of breadth did bounce last week, the S&P 500 and the top panel, mid caps, small caps, and the NASDAQ all closing near the zero line, but looking for a higher low this week, going into FOMC on Wednesday and major OPEX on Friday, where we're going to see about 3 million SPY puts expire. These events may combine to set up a large directional move into year-end. The S&P 500 versus the 10-year bond in the lower panel is dropping. We can see that the S&P is outperforming when this is the case. It's these quick reversals like we saw back in late 2018, the last time the Fed raised rates aggressively, which led to a 20% drawdown. We don't have that presently. With FOMC on Wednesday, many are expecting the Fed to keep things the way they are, with potential for a quarter-point rate hike. Many are looking for bonds to continue this higher highs and higher lows as institutions do park some assets in bonds over the last 2 or 3 weeks, with a short-term fade noted last week. Junk bonds and high-yield corporate bond ETFs all moved higher last week. This is the weekly time frame. Note that we did get rejected right at the 20 EMA. We're looking for price action to follow through. That would be a risk-on signal. For equities, along with junk bonds, we want to see junk bonds continue to move higher, along with signals in IBB, which has been moving lower, along with IWM. If we can get these signals to turn all together simultaneously, that would be an indication that we could see that Santa Claus rally that everyone's looking for. So we'd like to see a higher high in the New York Stock Exchange advanced decline, as well as Bitcoin, which was added to our indicators a couple of weeks ago. We'd also like to see the US dollar moderate, maybe stay in a sideways pattern. That would assist in a rally for international markets and put pressure on commodities, with gold and silver in a range over the last 6 months. Sectors are improving, as we can see, with strength noted in consumer staples, utilities, and healthcare last week. We're looking for performance this week, along with international markets, which have improved a bit with that moderation in the US dollar last week. In addition, we did see a bounce in crude oil, with its bullish correlation would imply strength in US equities in the short term. Sectors also improved last week. We had everything moving higher except for XLC, which is below its descending 20 and 50-day moving averages, along with biotechs. But we did see strength in real estate and transports, which is very bullish. We're looking for a follow through there. And we're also looking for retail and consumer discretionary to improve going into the last 3 weeks of trading for 2021. Strength was noted in XLP, XLU, and XLV. Many of you were trading with us on Friday as we saw those continue higher. Sector rotation also suggests more upside in the short term. So we're still in the early recovery phase, and eventually we'll reach a full recovery, after which the new cycle will start over again with an early recession. Presently, we're in the early recovery phase and could see more upside, despite market pundits and expectations of rate hikes to come. Finally, there is the consumer's discretionary ratio versus consumer staples. If consumer staples continues to outperform, it could affect a year-end performance. So with rate hikes in the forecast, we need to be aware that this indicator could turn lower, which would tell us to position more cautiously going into 2022. Most sectors moved higher last week. With that, the semiconductors were performing quite well. AMD did fade on Wednesday, Thursday, Friday, but managed to find buyers near the 50-day moving average looking for a bounce. AOSL, another semiconductor, looking pretty strong. We also had strength in the builders and home improvement group. Construction related names all pushed higher. Builders First Source, continuation higher. DR Horton also pushing higher, looking for a follow through. Some real estate related names like CCS, Century Communities, in a bullish pattern, pushing higher. Builders looking for a follow through, with Green Brick Partners, who owns, develops, and sells land and builds single-family homes in Dallas and Atlanta, breaking out last week, looking for the follow-through and also looking for strength in the builders to persist. Expeditors International from the IBD also looking very strong this week. It provides global logistics services for air and ocean freight, with EXPD looking like it's going to break out into the buy zone, with its RS line rising to 87 over the last few trading days, signaling a potential breakout. Intuit is trending. I know Rob was trading this one last week. Additional semiconductor stocks, LRCX looking for the follow-through. And for semiconductors to be persistent again this week, I'd like to see a follow-through in many of these names. Together with construction and home improvement names, we did see LPX, Louisiana Pacific, following through last week, breaking out on Friday. We also saw a lot of commentary about rare earth minerals, in this case MP materials, which is breaking out on volume, MACD's crossing, stochastics rising. A lot of talk about lithium production with respect to the anticipated increase in electric vehicles. Many of these companies will most likely follow through. Investors Business Daily Swing Trader Alert also mentioned Global Lithium ETF, which is about to bounce off the 50-day, looking for a change in direction to continue with MACD. Stochastics has already turned, suggesting closes in the upper half of the daily range as RSI forecasts potential follow-through and a move back up to the highs. Watch for LIT to continue, along with MP. Microsoft, software names, and technology outperformed last week, so we'll be looking for continuation possibilities with Apple, Microsoft, IBM, as we look for persistent strength in semiconductors, software, hardware, and technology going into the last 3 weeks of 2021. Pulte Homes, another stock in the builders group that looks good, looking for the follow-through. We watched as Regeneron continued higher last week. That closed at 52-week highs. It's also worth noting that Tesla bounced at the 50-day. Buyers showed up, so we'll look for a follow-through this week, along with a much unappreciated Ford Motor Company, which had a nice breakout on Friday on above average volume. MACD is about to cross, and stochastics suggests that we could see follow-through. With similar price action noted in General Motors, volume was above average, MACD is about to cross, and stochastics is rising, along with RSI. Additional stocks from the builders and construction-related group. We see Trex, nice trend, beautiful chart. Volume has been consistent over the last few weeks. Trex manufactures wood alternative decking, railing, and fencing products for the residential commercial markets, which are on fire at the present time. Look for a follow-through. At a time when wood products are seeing market inflation, look for Trex to follow through. Additional stocks reviewed by IBD last week. We did see a very nice follow-through in Apple to end Friday's session, with the top gamma strike moving up from 170 to 175 and finishing at 180 to end the week. Over the last 5 trading days, volume was noteworthy. Institutions have been picking up shares. MACD is above its signal line and stochastics is rising, with RSI showing muscle. With a question in everyone's mind, will Apple pull back in the short term? Maybe. We'll look for potential scalps as Apple closed at 52-week highs. Some of the consumer staple stocks that we're looking at as well, Colgate, Procter & Gamble, Clorox, PepsiCo, Coca-Cola, 3M, all of them paying a nice dividend and showing bullish price action. Watch for Colgate to continue higher. Domino's Pizza looks very strong. Looking for a push off of this 9 EMA that we tested on Friday. Looking for a follow-through this week. Oil and gas stocks continue to move higher. Looking for a follow-through in Exxon. Notice the volume. Looks like institutions buying. MACD's crossed as of Friday, with stochastics rising and RSI suggesting more upside. We looked at FedEx last week as well, still consolidating above the 21-day, looking for a push higher into the holidays. L3 Harris, Northrop Grumman, Lockheed Martin, Raytheon, all of those looking good last week. While we added to Northrop Grumman last week, Northrop Grumman, Raytheon, and L3 Harris are all three in a bid for the 144 satellite array, I believe for the Department of Defense. I could be wrong, but it is for a government agency. Those awards should be acknowledged by the end of the year, from what I understand. So these three stocks could follow through. Northrop Grumman getting most of the bullish action to end the week. Marriott following through. This one looks really good. While we look for a retest of 52-week highs, RSI suggests more upside. MACD and stochastics are rising. Facebook, I haven't got comfortable calling it Meta Platforms yet. Looking for a bounce off the 50-day. Starbucks looking for a follow-through into the holidays. Just about everybody goes to Starbucks while they're out shopping for a much-needed break. Thermo Fisher also looks like this trend will continue. Looking very strong. Stochastics rising, MACD about to cross, volume starting to pick up again. UGI also a nice follow-through last week. Volume picked up, MACD's crossing, stochastics rising. This holding company has interest in propane and butane distribution, natural gas, and electric distribution services, which is starting to see nice follow-through, as we saw last week in American Corporation, AEE, on the watch list, looking for a follow-through and a push back up to pivot highs. Together with FedEx, we're also looking for UPS to continue higher. Nice bullish action last week. RSI's rising, pushing above the 9 and 21-day volume. Shows institutions have been picking up shares. MACD has crossed, and stochastics suggests that we could see more upside. 3 weeks to go before the end of the year. This is going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for December the 12th, 2021. I'll send out a watch list later tonight of my favorite picks around 12 o'clock midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. And remember to check the stocks in the opening monologue that all show promise for potential follow-through this week. Take care, and we'll see you in the morning. Ciao.